day. Ira Epstein of Linn Associates with your metals market wrap-up for this Wednesday, and we're on the 3rd of June, 2020, about 5:15 p.m. Central Time. As you can see, the gold market was down today, and the early Thursday night trade, which is where this is, we're down another $2. Silver's back down about, cracked the 1800 level, as you can see, and it's back down to 1794.5. In fact, most of the metals are down, even with the dollar lower. Today was just a classic melt-up in the stock market. Everything went that market's way. Bonds and notes broke as they started gaining yield back. We haven't done too much in the energy markets today, and that's because there's still a question as to what tomorrow, if there's going to be a video conference meeting, does it go ahead in the cuts? The point right now is that the Saudis have given in to Russia to go month to month. So right now, the two of them have agreed to go to the end of July with production cuts. However, the problem they're having is that Iraq and Nigeria are way behind. In fact, there's a few other countries. They want them to catch up, otherwise they may not go ahead with this. If they keep doing that, you know what's happening. Our WTI is coming up. But this is about metals, and today was a big down day in the metals. One, in relation to the stock market melt-up. As we look at gold, for the week, we're down 2.25%, $39 an ounce at this point. We have backed off now about $60 from the high close that we had a few weeks ago. When we look at the action, today's action was pretty bad. We had been in a trading range caught by that high and right through here. And what the market has done is it broke through that level. In the process, what do we have? Well, when we look at the swing line, we're still not in a trend. We have a higher high, lower low pattern. The market moved away from the 18-day average. Today's high, if we take a look at it and we come back to today, was 1738.90. It again hit that 18-day average. Just look how many days you were hitting that, and now you've broken out to the downside. In terms of moving averages, if the market wants to add to this, well, the 100-day average is down here. More important to me is where's the lower Bollinger Band. And as I look at this pattern, you're right here. So you hit the band. My rule of thumb is the first time a market hits a Bollinger Band, if it's on the upside, I'm assuming the longs were in there just because bias would have to be up, and I assume they're going to take money off the table. On the downside, the same thing. So I think today, money came off the table. Is the market in a trend? It is not. Is the market oversold? It is. So if it wanted to break further, I can argue for the 100-day average of closes, but I can also argue on bounces resistance back to the 18-day average of closes. The August gold versus July silver gold ratio, well, not really doing anything. Silver's holding its own still against the gold. Silver did lose its embedded reading, and it lost it, if we take a look right on the close today, I believe, just by a fraction, but it's keeping it lost. That means the market probably wants to make a move towards that 1740 area, so it's something we have to keep our eyes on. You still have the bullish pattern of higher lows, higher highs, but when this momentum is lost, that's not a pretty sight. It can be gained back only tomorrow. On rallies, those that are scared of their long position, I wouldn't be surprised if they do some dumping in the market right now. In the copper market, copper hung up there today during the day against the upper Bollinger Band and then pulled back. This market is still trying to develop an embedded reading. You know, if you would think that with all the stocks going higher that we saw today, and I'm talking indices, different levels of the spiders we're moving on, it's interesting that we didn't get a move in the industrial metals, because you would think that's going to be the next play in the commodity sector. But you really didn't. Copper held on, but as you saw, the other metals let go. Platinum let go back into the area of its support, the 18 to 100-day average of closes. Momentum down, but not a close under that 18-day average. And that's the interesting thing. So many markets are not under those 18-day averages. I've moved you now to the September palladium. And this market's got a pattern where it's actually trying to make higher lows and higher highs right against the 18-day average of closes. We'll have to wait and see how it wants to play out. As for the dollar index, as I told you, I thought it was a breakout to the downside. This market is doing what I call running the lower Bollinger Band. It just doesn't get away from it. It just keeps diving on it. Tomorrow we're going to get from the European Central Bank their monetary policy. We're going to get our Fed's monetary policy coming at us next Wednesday. So that's when our monetary meeting finishes up. It's a 2-day meeting then. You developed a bearish embedded reading. This market still looks lower. Are we going to get a bearish crossover? Generally, if the dollar breaks, that's a bit friendly to the metal. So we'll see how these metals want to resolve just what's been going on. You know, I write about all this twice a day for my subscribers. And what I do is I'll give them first at night what tomorrow's reports are going to be, what they're looking for, the trade, how markets are looking, day's action today. In the morning, I'm prepping them for what the afternoon holds, how those reports came out. As you know, part of my full subscription does include the morning subscriber video. Others can get just the morning subscriber video and even break the commentary down. So there's 3 different packages you're able to take for it related to the futures markets. As I put these packages together, the idea is to prep you for what the trade is. I don't walk on water. I'm not going to be right all the time. I'm also not going to be wrong all the time. I know that. I've done this 51 years. However, the idea is to get you prepped for what the day holds in a way that is short to read, easy, and right to the point, because time is everything. And if you want to read a lot of reports, well, you can go on the internet and read all the in-depth reports you want. There's some that are an hour-long read. Okay, by the time you get to the end of them, I don't think you know what you read at the beginning. The idea here is to get you going in a way that you understand. You can go to our website, find out more about this by going to our research section. If you haven't tried anything we've done, you can go to our free offers on our website, or you can click up here. It'll take you right there. In the meantime, I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.